Good morning, everyone. I hope you're as well as you can be in this scary, horrible time. I'm coming to you with some more advice on my mortgage and information channel. If you are new here, I'm so pleased to meet you. Thank you for watching. At the moment, my channel is a bit of a mixture. Mortgage and information and tips is the reason my channel started, but I do sometimes digress to some more fun and light-hearted topics like fashion hauls, interior hauls, and just everyday life with my 4-year-old daughter. But today we are serious, and I am coming to you with some topics that are really relevant at the moment and need to be acted on sooner rather than later. So my video today is about insurance. So I am a whole of market broker. I do all property finance and insurance advice. Life insurance, critical illness insurance, income protection, they're the 3 areas I'm going to cover today. I just wanted to put this video out there because a lot of you are at home at the moment. You will be going through paperwork and documents and reminding yourself what you have or what you don't have, and there's never been a more critical time to make sure that you've got the protection in place for your family. I think we do go through life and we do think it's never going to happen to me, and hopefully it won't, but we do need to have that protection in place to make sure that it doesn't. People do insure their washing machine, their car, their house, but the biggest asset of all is yourself. You are the person that's creating the income to have the car, to have the house, and if you're not earning that income, then your lifestyle will disappear, yet people don't protect themselves. So it's quite alarming still how many people don't have a protection plan in place, especially when you've got children. So I'm just going to cover the various areas with you and make sure you've got an understanding of what each one does. And obviously for anything more in depth or any advice, then do call me directly or email. I will leave my details below for you to do that. So this video today is purely information to give you an overview and just to let you know what's going on in the market at the moment in these times. So as of the beginning of the week, all the providers were still covering coronavirus. So anybody that got it was covered, anyone that died from it was covered. We weren't seeing any exclusions, we weren't seeing any premium rises. So that was great news. And I've been meaning to do this video for a couple of days, but I am quite inundated at the moment. However, today we've noticed some changes which maybe aren't so rosy, so there really was a pressure for me to get this video out so I can give you the best chance of getting the plans that you really do need. Okay, so we've heard today that Aviva, which is one of the biggest insurers, is now adding additional questions to their medical application form. Those questions are: have you been diagnosed with coronavirus? Are you self-isolating? Have you been advised to self-isolate? Are you showing any signs of coronavirus, i.e. coughing, shortness of breath, fever? If you answer yes to any of those, then the underwriting is going to change from giving you an automatic yes to a referral, which means it's going to be manually underwritten. We're going to notice a lot more manual underwriting on cases now, which means that the processing time is going to be longer, and they will therefore have an out to exclude coronavirus for some people, or up the premiums, which is known as rating the premiums. That means they still do give you the cover, but the premium goes up because you might be a higher risk. So we've only seen one provider do this, but once one does, the others do tend to follow. So if you are thinking now's the time, I don't have a protection in place, please do apply now. I would recommend using a broker, but this is not a plug for business. You can go online and do it. I personally wouldn't recommend that you do that, just because there's a lot of definitions in the critical illness plans, which I'll come on to. There's waiver of premium, there's guaranteed or reviewable rates, there's total permanent disability, there's indexed or level, there is waiver of premium. There is so many different options that you can have to make that plan suitable for you, and some of those options only cost £1 more, but it's good to speak to a broker, any broker, not me, just to have an understanding of the plan you're going to get and to make sure that the plan you're paying for is one that is going to pay out. So we need to make sure it's medically underwritten at outset, and sometimes when you go online and you see the cheap ones, they are not medically underwritten at outset, so you're paying for a plan that may not pay out. So please be aware of that. There's no charge from from our brokerage, there's no charge for insurance. We get paid commission by the provider, just so that you know how we are paid. However, I just want to say again, this is not at all a plug for business. It is just to give you information so that you can make your own choice as to whether a plan is right for you, and if so, which plan is right for you. Okay, so life insurance, pretty much what it says on the tin. It covers your life. You can have a joint plan or a single plan. You can have those plans written into trust to a beneficiary. So if you were to die, then that sum assured, so the amount you would be paid out, will be taken out of your estate for tax purposes and straight to the beneficiary. So that is a complimentary bit of paperwork that we do for you. Some brokers don't. If they don't, make sure you ask. If you have two single plans, I would advise them to be written into trust to either each other, if you've got a spouse or partner, whatever is right for you. But without getting too technical, I just want to give you an overview right now. So a life assurance plan, you set the sum assured, so that means whatever amount you actually want to be paid should you die. That might be to cover your mortgage, it might be to cover your mortgage and debts or other buy-to-lets that you might own. It might be to give you also a buffer so that your spouse knows that the mortgage will be paid and there will be a pot of money left that they can use to either cover loss of income into the house or to care for any dependents that you might have. If one of you is gone, not only is there now one income less into the household, but also one of you's either got to give up work to look after the children or continue to work and pay for extra childcare to look after the children. So sometimes just covering the mortgage isn't enough. And can I please say, life insurance is not expensive. It's not expensive. Obviously everybody's different ages, different heights, different weights, smoker, non-smoker, so there are variables obviously to the premium, but 9 times out of 10 life insurance is not expensive. So please speak to your broker and find out what a simple life insurance is going to cover. It's going to cost you. It is not expensive. In the life insurance plan, it will cover terminal illness. If you were diagnosed throughout the term with a terminal illness, in other words, you are going to die within 12 months, they will pay you that life assurance early so that you can enjoy the money. This is such a morbid conversation, I'm so sorry, but it's one that we need to be having. So within a life insurance plan, there will be a terminal illness cover, which means that if you're going to die within 12 months, they will pay you the money before you die so that you can enjoy it and know your family is safe, or go on holiday, or pay off some bills, or just enjoy your last months together. So that's a life assurance plan. There are a couple of variations on life assurance plans. For example, you can have a level sum assured, which means that sum assured stays the same throughout the term of the plan, or you can have a decreasing term assurance, which means it decreases in line with normally your mortgage. So for example, if you had £100,000 residential mortgage on a capital repayment, i.e. that mortgage is reducing over the term, then you would match your mortgage insurance or life insurance, decreasing term assurance over the same term as the mortgage, which would then decrease in line with your mortgage. It's the cheapest form of life insurance to have. Again, speak to your broker about the right plan for you, but that is how life insurance works. At the moment, as I said earlier, there is no, most of the providers are still covering coronavirus. So get a plan now if you haven't done it already. We are noticing a couple of extra questions, as I've already said, so I'm waffling now, coming into applications, and a lot of people are now self-isolating. So yeah, that may not be the case for in the next couple of days, so do act quickly. Okay, the next one is critical illness. This plan gives you a lump sum if you become diagnosed with a critical illness that fits the provider's definitions. Each provider has different definitions. There is a list in something called the key features of that particular provider. It will show you exactly what they cover and the definitions of that. For example, if you had a cancer of some sort, the definition may say that they will pay you if you had stage 3 or over. So if you've just been diagnosed, or you're stage 1, that might not fit that particular provider's definition. It might. I'm just giving you an example there. So as long as you fit the definition of a critical illness, and there are a lot of them, you will have the payout as a lump sum, provided you have not non-disclosed something on the application form. So when you apply, there'll be a medical questionnaire. Make sure you answer that as accurately as possible. Sometimes if there are a few things you said yes to, they might ask for a GP report, and then they will assess the risk, assess the premium, assess if they're going to exclude anything. Other than that, if you've answered no to most of them, you're likely to be accepted at standard terms. You'll have the cover straight away. So as long as you've been honest on that medical form, if you were to unfortunately become critically ill and it meet a definition, they will pay you that lump sum. Now, often critical illness goes hand in hand with a life insurance. Reason is critical illness is expensive because it's used a lot. So it doesn't have to be expensive. It depends how much sum assured you have. For example, if you have a 100k mortgage and you want that mortgage to be covered, and you have a 100k life and a 100k critical illness cover, the critical illness cover will be the most expensive part of that plan. What you can do is you can reduce the critical illness sum assured. So you can say, I want the full 100k cover on my life, and I only want 20k cover on my critical illness. This will then reduce the premium to a budget that you feel comfortable with. And it's better to have some than none, because if you have a critical illness, you will want a buffer of money, whether that's to take the pressure off the bills, pay for medication, alter the house, God forbid, depending on what your critical illness was, have some breathing space, make some choices. Do you sell the property? Do you need looking after? Can your partner now not work because you need looking after? Do you need extra childcare? So many reasons why a lump sum of money is always going to be useful if you are diagnosed with a critical illness. So the other thing to bear in mind is if you have a standalone critical illness plan, i.e. no life insurance, you have to survive for 14 days to be paid out. If you link it with a life insurance, and remember the life insurance doesn't cost a lot, you don't have to have that survival of 14 days to be paid out. Again, it's so morbid, I do apologise, but it is a serious conversation and I do want to have it with you. So that is basically a life and critical illness plan. If you were to put your life plan into trust and you did have a life and critical illness plan, don't worry, because it's something called a split trust. So if you became critically ill, the critical illness money would be paid to you and it wouldn't go to your beneficiary. It would only go to your beneficiary if you were to die. Okay, the next one is income protection. So this insurance is not expensive. It's undersold and under prioritised, and I'm guilty of this too. We always want to protect the mortgages with life and critical illness. Income protection always comes last. So if somebody's got the budget and they like that rounded sort of package of protection, then they would go for an income protection. But never before, with obviously what's going on at the moment, coronavirus wise, have we been more shocked into a situation that we might not be able to earn money. We've got to stay at home, we're forced to. And even if we are able to continue to work, like myself, I've got an office at home, I didn't think I would be affected. Hopefully I won't be, but I can only work if the providers and the lenders are open, and if the providers and the lenders can lend and provide. So everyone's got a knock-on effect of whether they can work or not, and everyone thinks it's not going to happen to me, but it is. It's happening to us all right now, and it is really shocking. If you already have an income protection plan, well done, because not many people do, and people need to know about them. Okay, so income protection is an insurance that will pay you if you're unable to work due to illness or sickness, not accident. Don't get confused between the old plan. So any illness or sickness that means that you cannot work for more than a set amount of time that you decide at the outset, that's called the deferred period, they will pay you for. You do a medical application at the start. Normally any medical ailment that you've suffered with before won't be covered. That's pretty normal for an income protection. Or it might be covered and it might be rated, which means the premium goes up. So they just protect themselves. There's an element of risk there, and you're more likely to go off with the same thing again. That's why. Let's say you've done a medical form and you haven't got any medical ailments, or not one that this provider is bothered with. They will pay you a percentage of your annual gross income, normally 60 to 65% of it. The reason they do that is they don't want to make life too easy for you. They do want you to go back to work. So they give you enough to survive, but not enough that you're not motivated to go back to work. They set the amount at a maximum of 60-65% depending on the provider. However, you don't have to have that. Obviously, that's the maximum you can have. That will be the maximum premium. If you think I only need this much to cover my mortgage and bills, then that's the amount that you would set as your sum assured. The next thing you set is your deferred period. That means how long can you survive for without earning any money. Now, we're supposed to have 3 months salary or some sort of savings in the background. The reality is most of us don't. How long can you survive for if you couldn't work from tomorrow due to illness? 4 weeks, 6 weeks, 8 weeks? You have a credit card you could use? Would you really want to get into debt? Could you pay the debt if you're not working? The minimum deferred period is 4 weeks. The maximum deferred period is 24 months. So depending how lucrative your savings are and your own circumstances, you can set your deferred period. Also, find out what you are covered for from your employer. Sometimes an employer will actually cover you for 6 months on full pay if you're ill. So find out what you actually have cover for and make sure you're setting your deferred period for an accurate amount. So for example, if your employer is going to pay you 6 months, then your deferred period will kick in at 6 months. So you go for 6-month deferred period. When your employer stops paying you, the provider will start paying you, and that's how it would work. So make sure it fits with you, because the longer your deferred period, the cheaper the plan again. So make sure you get it accurate for what you've got. Also make sure that if your employer says you are covered, make sure it's not just statutory sick pay, which is £94. You can't survive on it. So make sure you find out exactly what you are covered for. Look in your contract, ask your HR department. Okay, so we've got an income protection, we've got the amount that we know we want to be covered for, we've got the deferred period that we want to be covered for, and that income protection is now set. It gets medically underwritten at outset, so you will know any exclusions at outset. If you then become poorly and you cannot work due to illness or sickness, and it's not excluded from your plan, then after your deferred period, they will start paying you. This plan can be made even cheaper by setting the term. So for example, you can have a term up to age 65, or you can have just a 2-year term. Again, if you go just a 2-year term, the premium becomes cheaper again. So a 6-month deferred, just enough to cover your bills over 2 years, really is a cheap protection plan to have. Why we don't all have one, I do not know, but we should all think about it. And 2 years, we would hope we would be well enough to return to work after 2 years. So as an absolute minimum, go for a 2-year deal, just to have something. 2-year term, I should say. So that's an overview of those 3 most important plans. Just want to reiterate, at the moment, most providers are covering coronavirus. So if you haven't got a plan, get one now, speak to a broker. I wouldn't advise you to go online and do it yourself for the reasons I stated at the start. Make sure you're getting a plan that's right for you and your family. And yeah, act soon, because as I already mentioned, there is one provider, and probably when I turn around and update my computer, a couple more that are now asking additional coronavirus questions. So very soon things will be excluded, so act now. I hope that's given you an overview of the insurance market. I know it's a boring topic and it's one that always gets put off. No one really wants to do it or talk about it or have it. But if you can just think of yourselves like a cash machine, You know, you are earning money to support the lifestyle that you have. So, you know, if there was a cash machine, which is you, by the way, in your living room, that would probably be the first thing you would ensure if you could actually physically see it. And you are that cash machine. If you cannot work or if you are poorly, how are you going to protect your lifestyle and your family and pay the bills and not add any extra stress when you really don't need stress? I really hope that this has been informative. Maybe you've learned something, maybe you haven't. Maybe it's just a reminder that what insurances do you have? Do you have enough? Do you understand the ones that you should prioritise? Should you get one now before coronavirus kicks in and it's excluded and premiums rise and underwriting changes? It's just, if I've made somebody think about it or somebody go out there and get a plan, then that's brilliant, because that's my job. I just want everyone to understand what's out there, get the information and make your own choice. So if you've got any questions at all, please do leave them below. I will come back to all of them if I can, and I will also provide my personal details in case you've got any questions for me. But yeah, I hope you all stay safe and well, keep washing your hands, and I'll see you again soon. Thanks for watching. Take care. Bye.